Hey everybody, thanks for tuning in. My name is Ara and I'm going to be sharing with you a full SMC strategy step by step, start to finish. So before we get started, there's a few things I'd like to mention. Now I'm sure we all know there's a lot of confusion and scattered information in the trading space. This can make it very hard to stick to one strategy, which will prevent you from seeing any consistency in your results. The strategy that I'm about to share with you is simple, mechanical, and easily repeatable. Do yourself a favor by watching this video to the end and giving it your full attention. I would just like to mention that this strategy is 100% free. There's no strings attached. Please like the video and subscribe to my channel if you find this valuable. There's a few key components to this strategy that you should have a firm understanding of in order for you to fully grasp the information that I'm about to share. First of all, we have market structure and order flow. This is the art of identifying major highs and lows in price and being able to differentiate a bullish market from a bearish market. Next, we have liquidity concepts. Liquidity is what fuels all markets, and we must be able to identify how and also where our positions could potentially be liquidated in order to effectively prevent that from happening. Now finally, we have order blocks and imbalances. These are areas in price that we must locate in order to validate our trading ideas and frame the trades themselves. If you're new to trading and have no idea what any of this means, head over to my channel where you'll find individual videos on these topics and then come back to this video when you're done. Alright, now we're getting into the good stuff. These are the 5 simple steps to executing this strategy. After we read through the steps, we're going to take a look at entry models so you can visually see how this strategy can be implemented. If any of these steps don't make sense to you, just be patient and we'll explore them each in depth with real chart examples near the end of the video. So step number 1, on the 4-hour time frame, gauge the overall bias and locate major points of interest. Now you might be wondering, what are some examples of points of interest? Well, we could look at major highs and lows, we could look at order blocks, or imbalances. Step number 2, when price enters a point of interest, drop down to either the 15-minute or the 5-minute time frame. Step number 3, wait patiently for price to purge liquidity within the point of interest. Step number 4, wait for price to impulsively break structure and create imbalance. And step number 5, enter at the order block responsible for the break of structure. We can utilize this strategy in 2 different scenarios. We're going to start out with model number 1, which is a high time frame reversal model. The first thing that we look for in this model is a clear liquidity grab. This occurs when price is seemingly continuing the current trend, but then abruptly reverses and breaks market structure. The first break in market structure is classified as the change of character. Once this liquidity grab and change of character has occurred, price will have likely left behind a clear order block and/or imbalance. We can highlight that zone and use it as our 4-hour point of interest. This is the area where we will be looking to enter a trade on a lower time frame. Here's where the strategy really starts to come together. Once price reaches our 4-hour point of interest, we can then drop down to either the 15-minute or the 5-minute time frame to monitor potential entry opportunities. The lower time frame that you choose is entirely up to you. The 15-minute time frame is typically safer, but it'll provide less entry opportunities. The 5-minute time frame, however, will provide much more entry opportunities because you're more zoomed into internal market structure. This means you'll be able to catch trades very early on in the move, but it also increases the risk of being wrong because it's often harder to read structure on lower time frames. After we've chosen a lower time frame to focus on, this is the structural formation that we're looking for. This is basically a fractal version of what already occurred on our higher time frame. We must patiently wait for price to purge liquidity, which in this example is basically tricking traders into thinking that price is continuing to the upside. We then wait for a change of character to the downside to occur. This is our signal that the 4-hour point of interest is being respected. So now it's time to locate an order block and imbalance that act as a point of interest for this bearish move. This is the area in price where we can enter our trade. We're going to be taking a look at EURUSD for our first example of a Model 1 entry. On the right side of the screen, you can see that I've put together a quick trading plan template using Notion. This trading plan contains some risk management guidelines, examples of points of interest, and the entire 5-step framework for our strategy. I've also included a small entry checklist to ensure that we're only getting involved in the best trades. Now, the first thing that catches my eye with EURUSD is that we have a major swing high right here. And you'll see that on the right side, in our examples of points of interest, one of the examples is major highs and lows. The reason for that is because a lot of liquidity rests above and below major highs and lows. So, with that being said, we can take a look at current price action. It is clearly bullish to the upside. So that leads me to believe that this major high will be tested. So let's play price forward and see how this goes. Okay, so we can see that price has tested that high. It's broken through that high, but we now have to drop down to a lower time frame to see if there's going to be a break to the downside, signaling that this was just a liquidity grab instead of a break of structure. So we're going to check this off the list because we've eliminated the first step to our trading plan. On the 4-hour time frame, gauge overall bias and locate major points of interest. Okay, so our point of interest has now been met. So we're going to drop down to step number 2. When price enters a point of interest, drop down to the 15-minute or the 5-minute time frame. In this case, we're going to drop down to the 15-minute time frame. So on the 15-minute time frame, we can see that this line here is where our structure was tested. Actually, let me go back to the 4-hour and draw it as an arrow instead of a horizontal line and label it as liquidity. So back to the 15-minute. I just want this to be a good reference point here. So the current structure that we have to pay attention to is this low right here, because that's the higher low that was created after liquidity was tested from that high. So as of now, price is still trading to the upside, so we don't have any change of character yet. But before I get too ahead of myself here, I'm going to check this off the list because we have completed step number 2. Step number 3 is wait patiently for price to purge liquidity within the point of interest. Well, we could identify this as a liquidity grab, but again, we need to wait until we have some structural change to the downside. So let's just start playing price forward and see what happens. Okay, so as of now, we're definitely starting to see some movement to the downside. Liquidity has been purged in multiple areas here, so that's a good sign, and we're now breaking structure to the downside. However, since we're anchoring this to a higher time frame bias, we need this structural low here to be violated. So we're not paying attention to any of the internal structure here, although it is a good sign to move forward. Okay, so right there we have our change of character, because that low was clearly violated to the downside. So let's label that as our change of character. So let's head over to our checklist once again. We have waited patiently for price to purge liquidity within the point of interest. And now we've waited for price to impulsively break structure and create imbalance. Well, let's check. Do we have any imbalance created here? Let's zoom in a little bit. So the point of origin for this bearish move that broke structure would be this order block right here. Okay, now there is imbalance just below it. Let me eliminate that for a second so I can clearly highlight the imbalance. Between the low of that candle and the high of that candle is imbalance. There was some imbalance here as well, but price came back up and corrected that. However, there's still remaining imbalance right here. So we can check this off our list as well. Now the next thing we have to do is enter at the order block responsible for the break of structure. So that would be this candle right here as our refined order block. Right, so we can check that off the list. Now, before we set up a trade position, let's check off our entry criteria. The order block caused a break of structure. Yes, or a change of character in this case. It's the same thing, but a change of character is the first break of structure. The order block is the extreme zone. Well, it is the extreme zone because the bearish leg that we're currently dealing with is right here. And the order block is at the furthest possible point to the upside. So that is the extreme zone. The order block created clear imbalance is the next thing on the checklist. And yes, it did. As we just went over, there's imbalance right below the order block. So this looks good to enter a trade. So we could set a limit order here, entry at the low of the order block, stop loss just above the order block at that candle's high. So that gives us about 10 pips. And the take profit could either be at this low that was just created, or it could be down here at this low. Just to play things safe, we're going to target the most recent low. Now that gives a very healthy risk to reward ratio of 6.61. So let's play this forward and see if we get tagged into the trade and see how it develops. Okay, so the trade would have been triggered in right there. And the take profit level would have been hit. So this is a good example of entry model number 1, and stay tuned for the next one. For the next example of a Model 1 trade entry, I'd like to take a look at EURGBP. Now we're starting out on the 4-hour time frame as usual, and I would like to draw your attention towards this swing low right here that is currently being tested. Now I'm going to label it as a liquidity grab because I do believe it doesn't have the momentum to continue to the downside. If you look to the left, this downward momentum is filled with small candles. Now, if you compare that to the bullish momentum to the left of that, you can see that there's a potential that this bearish trend is going to be fizzling out and changing direction pretty soon. So this could very well be a valid liquidity grab. But in order to understand that, we need to drop down to a lower time frame to see if we have any bullish structural changes to confirm our bias. So let's check our first step off the list, because we've gauged the overall directional bias on the higher time frame and located a major point of interest being this major low right here. So on the 15-minute time frame, let me drag this arrow out as a reference point. That's where the potential higher time frame liquidity grab has occurred. So now we're looking for a change of character to the upside. Currently, our high is here and our low is here. So we need to see this high violated to the upside in order to get involved in a trading opportunity. If that were to happen, we do have imbalance here. We have an order block down here, so that looks good. But let's play price forward and see if we do experience a change of character to the upside. Before I get too ahead of myself, let me check this off the list because we've already completed step number 2. Now let's play price forward. Okay, so it doesn't look like we're breaking this high. Okay, so yeah, this isn't valid to me anymore. I'm going to leave that where it is and this where it is for now as well. But we didn't see a break of that high just yet. We pushed back to the downside, so that's not a good sign. Okay, we do get the change of character there though. So let's delete these lines, clean it up a bit, and I will label this as the change of character. Now we can also label this as an internal liquidity grab because that low was violated and then price pushed back up afterwards. So now that we've had the change of character, let's see if we got imbalance and an order block to go with it. So we do have some imbalance right here. Let me highlight that. There's our imbalance and the order block rests just below it. So we can now enter at the order block responsible for the break of structure or change of character. Now before we set up the position tool, I want to go over the quick entry checklist and make sure that the order block caused a break of structure. Yes, it did. The order block is the extreme zone. Yes, it is, because it's the furthest down in this bullish leg. The order block created clear imbalance. Yes, it did. So everything checks off on our trading plan. Let's enter a position and set up the parameters. So this would be a long position. You'd set the buy limit order at the high of that order block. Stop loss could be at the low of this wick here. So that's about 10 pips. Let's just round it up to 10. And in terms of take profit, we could target any of these highs. Risk to reward ratio isn't that great there. So let's keep going. I'm going to target this high right here for a 5.1 risk to reward ratio, and we'll see how that plays out. There's plenty of imbalance here as well, so there's plenty of reason for price to trade higher. So let's see what happens. Okay, so we do get tagged in there. Quite a bit of drawdown on that, but that's okay. The order block is still being respected. Okay, so we can see that after quite some time, the final take profit was hit. You certainly could have taken profit at these highs here, but overall the final take profit did get hit eventually for 5.1 risk to reward ratio. So this is a good example of the reversal model. We had the higher time frame liquidity grab, an internal liquidity grab, change of character to the upside. It left behind imbalance and an order block. We used the order block as an entry system, and price pushed up towards the take profit. For our last example of the Model 1 reversal system, we're taking a look at AUDUSD on the 4-hour time frame. Now, looking at current price action, price is clearly moving to the upside, and it's approached this major high right here. However, we won't know if it's a break of structure or a liquidity grab until we drop down to the lower time frames. For now, I'm just going to label it as a potential liquidity grab, and we'll go investigate further on the 15-minute time frame. So let's check this first step off the list and then drop down to the 15-minute time frame. So here we are on the 15-minute. Let me drag this out a bit. So the current structure that we're looking at after this potential liquidity grab has occurred would be this low right here and this high right here. So we would need this low to be violated in order for a change of character to form and to validate our selling bias for our trade idea. Let's play price forward and see how this develops. Okay, so we were ranging sideways for a bit. We clearly have this internal liquidity grab here. I say that because immediately afterwards, price started ranging and never broke higher than that. So there wasn't much momentum after this occurred. So that's clearly just a liquidity grab. And then we made a push to the downside, creating a change of character. So let's delete these lines, clean this up a little bit, and label our change of character. Okay, so let's check some things off the list here. We waited patiently for price to purge liquidity within the point of interest. Now we wait for price to impulsively break structure and create imbalance. Do we have imbalance here? Yes, we do. In multiple areas, we have the extreme imbalance, which is up here. And we also have imbalance created down here. Now I choose to only focus on the extremes of the current leg that we're in. So I'm only going to focus on this up here. So we can certainly check that off the list. And now we have to locate the order block, which is just above it. It's the last bullish candle there before the bearish move. Okay, so we can check that final item off the list. Now, before we enter a trade here, let's go over our entry checklist. The order block caused a break of structure. Yes. The order block is the extreme zone. Yes. And the order block created clear imbalance. Yes. So this is a valid trade to enter. Let's drag that zone out and frame up our trade parameters. So we would place a sell limit order at the low of that order block. Stop loss could be just at the high of that candle, so about 10.5 pips. And in terms of take profit, let's see. We could set the take profit at the recent lows down here. However, I feel that it would be safer to set it at the high of this order block here, just in case that could be a continuation point for bullish price action. So that seems like a healthy trade, and it checks everything off of our trading plan list. So let's play this forward and see what happens. Okay, so this is an interesting example. We actually did not get triggered into the trade. Price clearly reacted to the imbalance instead of testing the order block. So this can happen from time to time. It's not a big deal. You simply just move on to the next trade. Not every trade is going to work, and no strategy has a 100% win rate. So in this case, the order block was left unmitigated and price pushed to the downside and hit what would have been our take profit. So this trade idea is no longer valid because this level has already been met. So we would disregard it at this point and just look for the next trade. So even though everything fit the plan to a T, this is just one of those trades that didn't work out, and that's completely okay. Now we're moving on to entry model number 2, which is a high time frame continuation model. This model is pretty straightforward because we're simply looking for a continuation of the higher time frame trend. The first thing we look for is a break of structure in the direction of the existing trend. Once that occurs, we simply find the point of origin for that move, which should be an order block and/or imbalance. We can then highlight that zone and use it as our 4-hour point of interest. Once price has entered our 4-hour point of interest, we can once again drop down to either the 15-minute or 5-minute time frame to locate potential entry opportunities. After choosing a lower time frame, we will be looking for this structural formation to occur. Now, I'd say that the most important aspect of both entry models is to patiently wait for the liquidity grab. There's a common saying in the trading world: if you can't spot the liquidity, then you likely are the liquidity. So if you're trying to enter your trade before this liquidity grab occurs, there is a high probability that your stop loss will be liquidated. Next, we have to wait for a change of character to occur, which is our signal that the 4-hour point of interest is being respected, because both our high time frame and low time frame are aligning. All we need to do next is locate the order block and imbalance that propelled price to create the change of character. This will act as the low time frame point of interest that we can use to enter a trade. Now that we've gone over the overall premise of the strategy and the steps to finding high probability trades, let's dive into some real chart examples so that we can see how this strategy can be utilized in everyday market conditions. So taking a look at EURUSD on the 4-hour time frame, there's a few things I'd like to mention before we start diving into the entry checklist here. So first of all, I'd like to mention that a point of interest on a higher time frame does not need to be perfect, because we're not looking to actually enter from that point of interest. We're simply looking for a reaction from that point of interest, and then we go to a lower time frame to further investigate. So this here on EURUSD is a great example of that. The zone that I've highlighted clearly has a reaction from it. Price rejected it and turned bullish pretty impulsively. However, if you look to the left where I actually drew the zone, it's not the perfect order block. Technically, the perfect order block would have been this small bearish candle right before that bullish up move. However, price never reached that point. But we can clearly see that there's been a reaction from this candle here. And that's all I need to know in order for me to drop down to a lower time frame and see what's really going on. So this is my 4-hour point of interest. I'm going to check that off the list right here. Now I'm looking for a continuation trade to the upside because price has been pretty bullish. There's clear bullish order flow here. Of course, we ranged sideways for a bit and then moved to the downside, but that could simply be to further mitigate this order block and then push back up. So let's drop down to the 15-minute time frame and see if there's any available opportunities here to get in long. So let's check that off the list. Now on the 15-minute time frame, we can see that after price tapped into that 4-hour point of interest, we made a huge push to the upside. And this push to the upside did in fact create a change of character. So let's label that. Now, once that move occurred, we can see that there's clear imbalance here, right? And then there's also an order block right here, the last bearish candle before that big push to the upside. Let me label this just as a point of reference. That's our 4-hour zone. And this is our 15-minute zone. Okay, so let's head back to the checklist. Wait patiently for price to purge liquidity within the point of interest. We certainly did that because you can see that right here we created a low and then price violated that low to tap into the order block. Okay, so that's the liquidity grab right there. Next, we have wait for price to impulsively break structure and create imbalance. As we just mentioned, that's exactly what happened here. So let's check that off as well. And now we can move on to the next and final step, enter at the order block responsible for the break of structure. Well, we've already identified that this is the order block. So let's frame out our trade parameters. We would set a buy limit order at the high of the order block. Stop loss would be a little bit larger in this case because of this huge wick right here. So we're sitting at about 19 pips as a stop loss. That's not ideal, but in this case, there's a lot of upside potential because if we look to the left here, we have significant imbalances within these large bearish candles here, and those are likely to be corrected. So there's a few things we could do here. We could either target this order block for our take profit, or we could decide to target the recent high here. In this case, I'm going to play it safe and actually just target the low of that order block. And by doing that, I'm able to achieve a 1-to-5 risk to reward ratio. So let's play price forward and see how this goes. But before we do so, let's just make sure everything's checked off on the entry list here. So the order block caused a break of structure. Absolutely. The order block is the extreme zone. Yes, it is. It's the furthest down in this bullish leg. Let's check that off. The order block created clear imbalance. This order block created very clear imbalance. Huge push to the upside. So let's play price forward now. Okay, so that was very fast. And you can see the true precision of this as well. Yeah, and take profit was hit. So just within three 15-minute candles, this trade was to completion. Let's really zoom in on that because I want you to see the reaction from that order block. As you can see, the wick just tapped in. You'd have to be on a broker with a very tight spread or a prop firm with a very tight spread in order to capitalize on an opportunity like this. But I believe that this is a great example to show because it really demonstrates the precision and the power of this strategy. I'd like to show you a clear example of the Model 2 continuation entry on an asset outside of the Forex market to demonstrate the versatility of the strategy. So we're taking a look at US 100 and starting out on the 4-hour time frame as usual. Now, as you can see, we have clear momentum to the downside with bearish order flow. So I'm looking for points of interest here. Now, the most recent one that stands out to me would be this order block right here. The reason that's an order block, of course, is because it broke market structure right there. So I'm going to label this as a 4-hour order block, and that's going to be our point of interest. So all we have to do now is wait for price to enter this zone. Okay, so right there, we've entered the zone. So I'm going to check this off the list, and we're going to drop down to the 5-minute time frame in this case, because I want a more zoomed in perspective. So we're going to check the second step off the list because we've dropped down to our lower time frame now. Now the next step is that we have to wait patiently for price to purge liquidity within the point of interest. Well, it looks like that already occurred right about here. We can see that price purged liquidity from that high and then started trading lower. So it didn't actually create a break of structure to the upside. It just faked people out into thinking that it would and then pushed back down to the downside. Now our most recent structural low would be this higher low right here. And that was not violated. So it looks like we're just entering a range right now. So that's our recent structural low, and this is our high right here. So we're looking for this low to be violated in order to create a change of character to the downside. So we can check that off the list. And of course, the next step is wait for price to impulsively break structure and create imbalance. Let's continue to play price forward and we'll see how this develops. Okay, so this is interesting. We made a big push to the upside, but failed to create a new high. So we're definitely still within this range. That shows some momentum, but it could just be more liquidity grab for purging the liquidity above these highs. So let's keep playing price forward and we'll see how this develops. Okay, so right there. So what I'm gonna do here actually is delete this and delete this and delete that. So the reason I'm doing that is because I've seen some more structural development here that is intriguing me. So I'm going to consider this as the liquidity grab. And this as the change of character. Because these are warning signs that we could get involved in this move pretty early on. So it doesn't necessarily have to be all the way down here because we're seeing this structural change happen very early on within the range. So we saw a clear liquidity grab there after price pushed heavily to the upside just to fake everybody out, and then it pushed right back down to the downside and created this change of character. Now we clearly see imbalance created here within the move that was responsible for the change of character, and we also have an order block right here, the point of origin for this bearish move. Okay, so this is very intriguing to me, and I think that checks off everything on our framework checklist here. Now let's go over the entry checklist before we place any trade parameters here. The order block caused a break of structure. Yes. The order block is the extreme zone. Well, let's take a look at this. So there's no other order blocks here within this bearish leg. We do, of course, have imbalance up here. I'm more focused on where the point of origin for the change of character occurred, and that would be this order block and this imbalance here. So I'm going to classify this as the extreme zone within this small bearish leg right here. The order block created clear imbalance, absolutely, within this candle right here. So I think that checks off everything on the list, and we're going to set up our trade parameters. So we could place a sell limit order at the low of the order block. Stop loss in this case would be too tight if I just keep it to that candle, so I'm going to extend it to the high of this candle, because that's basically the bearish leg that we're looking at. Let me just highlight that. From that candle high to this candle's low is the current bearish leg that I'm looking at, because prior to that we had a consolidation with bullish candles and then created that bearish push to the downside. So that's why I'm focusing on this right here as the bearish leg and this order block as the extreme zone in that leg. So I'm going to keep the stop loss at the high of that candle, which is about 10 pips. I'm just going to go ahead and round it up to 10 pips. And let's go to, actually, I'm not going to take it to the 15-minute time frame. I think we can just target these lows for now, just to be safe here. And that gives us a 4.71 risk to reward ratio, which is pretty healthy. And everything is checked off of our list. So let's see if this continuation trade works out for us. Okay, so a little more drawdown than I would like to see, but that's a great example of why stop loss placement is so important. We need our stop loss to be placed at a point of invalidation. And to me, if price were to surpass the high of this candle, that would make my trading idea invalid. So that's why I placed my stop loss there at an even 10 pips. And you can see that technically this order block that I was targeting for entry was violated. However, the overall premise of the trade was still intact. So it ended up being a successful trade. And that's a great example of how you can utilize this higher time frame continuation strategy on an asset class that is outside of the Forex market, such as US 100. For this next example of the Model 2 continuation entry, you'll notice something a little bit different. I'm here on EURGBP on the 4-hour time frame, and the order block that I've highlighted has actually been violated to the upside. You can see that this large bullish candle actually pierced through the upside of the order block. Now, the reason I'm showing you this and the reason that this is still a valid potential trading opportunity is because, like I mentioned before, the higher time frame point of interest does not have to be perfect. All we're looking for are potential reaction points. So it could be major highs and lows, as we've seen with examples prior to this. It could be major order blocks like this one right here. And it could also even just be imbalances. Sometimes price reacts to the imbalance and doesn't actually test the order block. So the point of interest on the higher time frame does not have to be perfect. We simply wait for a reaction from the point of interest, and then we monitor our lower time frames to look for trading opportunities. So that's exactly what we're going to do here. As you can see, the overall narrative here is bearish order flow, right? We see these big swings to the downside, and this could simply be a retracement, right? And the important takeaway here is that I don't have to be correct on this bias. Price could blow right through this order block and continue to the upside. All I'm doing is assuming that price is going to continue the higher time frame narrative to the downside, and that this is just a retracement back into this unmitigated order block, okay? So we have to monitor the lower time frames to see if that narrative is true or false. So we've completed the first step here. We've identified the overall bias and located a major point of interest on the 4-hour time frame. So now we're going to drop down to the 15-minute time frame and see if there's any entry opportunities that we can get involved in to go short on this market. Actually, right away, we can see an opportunity here. Let me clean this up a little bit. I'll pull the order block zone back and we'll really zoom in on what's happening here. So even though price violated the order block to the upside, we saw this immediate push back to the downside, and it actually created an immediate change of character too. This was the recent low, and price violated that low. So that's our change of character. And it did so impulsively that it created imbalance as well. So our imbalance is between the low of this bullish candle and the high of the next bullish candle. That's the imbalance zone. Price has already tested it, but it has not yet tested the order block responsible for it, which is this candle right here. Let me get this 4-hour order block out of the way so we can focus on current price action. So let's go through the checklist before we get too ahead of ourselves here to make sure that everything in this trading idea fits the criteria of our trading plan. So we've located the 4-hour point of interest. Price has entered that point of interest, and we're now on the lower time frame. The next step is to wait patiently for price to purge liquidity within the point of interest. Well, we do see that that's happened here. Let me highlight that. So we had a high point here, and price purged liquidity from that high before moving to the downside very abruptly. You can see that we never surpassed this high right here. So liquidity was purged from this high, and then price moved abruptly to the downside, creating a change of character. So we're going to check step 3 off of our list. Step 4, wait for price to impulsively break structure and create imbalance. We've already established that that did occur. Now, step 5 is to enter at the order block responsible for the break of structure. So this is the order block responsible for the break of structure. I'm going to label it as a 15-minute order block, and we're going to place a sell limit order right here at the low of the order block. Stop loss can be at the recent high, which would be this high right here that was never violated. That gives us about 22.5 pips. Now, in terms of a take profit, we can set it at this order block here, but I'm not comfortable with the risk to reward ratio that provides. So I'm going to take a chance here and actually target this recent low right here. There's a good chance that will be tested because we do have imbalance resting below it, which will act as a magnet for price to trade towards. So I'm comfortable with these parameters here, but let's just double check our trading plan to make sure everything fits. So we can check step number 5 off the list. Now let's go over our entry criteria. The order block caused a break of structure. Yes, it did. Change of character is the first break of structure. It's an early warning sign that the market may be shifting. The order block is the extreme zone. Yes, it is. There's nothing above it, so it has to be the extreme of this minor bearish leg here. The order block created clear imbalance. Yes, it certainly did. Between this candle's low and this candle's high, we have imbalance there. So everything checks off the list here. Let's play price forward and see what happens. Okay, so we were triggered into the trade right there. Let me just put a horizontal ray line at this low so we can identify exactly where we're targeting. Okay, so it did inevitably hit the take profit. It took a lot longer than expected, but no structure was violated, so the trade idea remained intact the whole time. So this is a good example of a higher time frame continuation trade, and it played out perfectly after fitting all the criteria of our step-by-step trading plan. Before we wrap this video up, there's a few things that I wanted to mention. I want you all to take note of the differences between the examples I demonstrated on the 15-minute time frame versus the 5-minute time frame. You may notice that the 5-minute time frame had more complex structure, which makes finding trades a bit more subjective, whereas the 15-minute time frame was much clearer and definitive. I would recommend testing this strategy using the 4-hour and 15-minute time frame to start, especially if you're a beginner and not too familiar with market structure yet. And as you gain confidence, you can certainly begin to incorporate the 5-minute time frame analysis into the strategy. I hope you all enjoyed learning this strategy and gained value from this video. If you did, please hit the like button and subscribe to my channel for future content.